What's up, Team Tackle? This is Coach Matt here. In this video, we're going to be breaking down one of the most widely used momentum indicators in trading, the RSI. We're going to cover what it is, how it works, the key signals traders look for, and the best ways to actually apply it in real market conditions using MPC as our case study here today. Now, if you've ever wondered how to spot overbought and oversold setups or how to use RSI to confirm momentum shift, this video is absolutely for you. And hey, if you like what you learn, hit the like button, share it with a fellow trader, and drop a comment if you got any questions. Let's get into it and break down RSI. RSI stands for Relative Strength Indicator. It was an indicator like many of the OG traditional indicators created in the 1970s and 1980s by Wells Wilder in a book called The New Concepts in Technical Trading Systems. It is a momentum oscillating indicator that oscillates between 0 and 100, and it gives us certain tradable signals at different levels on the indicator itself. Specifically, we're looking for answering one specific question. On a breakout, when price is breaking out of resistance or when price is breaking support, do you have room to run? That's the ultimate question on a breakout traders have. Do you have room to run? Is there another resistance level on top of that that's going to stop the price? Is the indicator showing you that you're late to the party because it's been up 14 consecutive days and you're buying on day 15, meaning you are absolutely late to the party? That's the ultimate question that RSI can truly help us understand as a trader going into potential breakouts. Now, I'll say RSI is a wonderful indicator. It's one of my favorite indicators out there, but it's not an indicator that's great for every pattern out there. What I feel with certain indicators like MACD, for example, a video we did a couple weeks ago on our platform, MACD helps with momentum and specifically momentum shifts in pullback analysis, in my opinion. It doesn't mean it can't be used to help you assess the momentum on a breakout. I just kind of think RSI is a little bit better for that. Now, when you are looking at RSI, the calculation is looking back at the last 14 periods. So if you're looking at a 5-minute chart, it's the last 14 5-minute candles. If you're looking at a day chart, it's the last 14 days. It's looking at the last 14 periods. Now, how the indicator works is if the last 14 days were all gains, meaning there was no losses to calculate in any capacity, RSI would be at 100. And if there was absolutely no gains in that period, RSI would be at 0. So it's helping us calculate that momentum of the gains or the losses over the last 14 periods. Now, the levels on RSI are going to be fairly easy to understand. When you get above 70, and that's what you see on the horizontal line when it gets red, you get into what's known as overbought territory. So if you're above 70 going into a breakout, you would be looking at that as an overextended situation, and you might want to tap on the brakes and wait for a better pattern to develop. Now, if you're going into underneath 30, as you can see right here, that's technically telling you you're overextended to the downside, and you might want to tap on the brakes, maybe lay off the selling pressure because you're overextended. Meaning if you're going into this breakdown right here, pretty good pattern, but you're already oversold because of all the selling pressure in front of that breakdown. And so oftentimes when you're going into a breakout or a breakdown, take a peek at RSI, understand whether or not it's oversold or overbought, because if you're the last person to buy in a breakout, you're typically the first person to lose. And the same goes on the downside. If you're the last person to jump on the bandwagon of shorting this stock, meaning you're 14 days going down and you're getting in on day 15, well, guess what? You're probably a little bit late to the party. And so the overbought and oversold zones can really help us understand that ultimate question on, do you have room to run? So in an overbought situation, what does it mean when you're in that bullish uptrend? Well, overbought signals in an uptrend are very common, quite frankly. In an uptrend, overbought signals strength. Remember, you're overbought. That means you're late to the party. It's not a sign of weakness, it's a sign of strength. Markets have momentum. And so you're certainly looking at a momentum condition. And so when you are officially overbought, you don't really want to chase price. You don't want to chase price because price has been going up, 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 and you don't want to be that bag holder. And so in an uptrend, when you're overbought, it's a sign of strength. And what you do is you look to buy dips in oversold pullback conditions. What you do not do simply because it's overbought is short. Overbought does not mean short. It doesn't mean, oh, let me go against the entire market out there and short against everybody's buy. It might mean tap on the brakes. It might mean wait on a better signal. It might mean wait on a pullback. But what it does not mean is to short the asset class simply because you're overbought. And so when you are in that bullish market and you're in a bullish trend and you get overextended or you get elevated on our RSI, in those pullback scenarios, you're going to be looking at that third zone. So remember, there's three zones you look at on RSI: overbought at 70, oversold at 30, and right around that 50 level. When you get that dips down to that 50 level, you get a little consolidation back up above that 50 handle. That's that buy that dip mentality. And so when RSI does get above 50, get above that 70 barrier, you're waiting on that potential retracement, or i.e. by that dip mentality. On the same side, if you're looking at RSI as a bear and you're looking at a bearish downtrend and things get oversold, that's a sign to be patient. That's a sign to wait on the potential bearish retracement before you do something aggressive. Now, that's how you handle overbought and oversold signals. Another concept to keep your eye on when it comes to RSI is the concept of divergence. And we'll take a look at that here in just 1 second when we get into a couple case studies. Divergence is when price is doing something different than the indicator is doing. And it's really based on support and resistance. When you see support establish a lower low, but the indicator is establishing a higher low, the indicator is picking up some momentum shifts that you may not be seeing on the chart. Now, on the chart, I can see a loss of momentum on the bear side. That indicator, because of the divergence, is confirming the loss of momentum, showing you that the bulls are coming back in a little bit stronger than what the price is indicating specifically. And so divergence can be a powerful reversal tool. When you see RSI bullish divergence, you start to think bullish reversal patterns. When you see resistance establish higher highs, but your RSI is establishing lower highs, that's once again a signal that you have a reversal going on, and you should not be pushing the edge as a bull to a certain extent. And so with that said, guys, let's go into the market very quickly, and let's take a look at this from a couple case studies. Now, the first thing I want to look at is I just want to look at the S&P 500 very quickly to take a look at what RSI is kind of showing us. As you can see on the S&P 500 specifically, you have price establishing a higher level of resistance. But in that exact same time frame, you have a slight reduction on the RSI, showing you divergence. That divergence is confirming the slowing momentum we're seeing on the chart, and we would be anticipating a pullback in that scenario. That's what divergence can help us understand, is we shouldn't be too aggressive on the bull side of the equation when we see a little bit of divergence. On the flip side, when you look at MPC here, another case study, RSI is extremely good helping us understand the breakout. In a previous video, I talked about MACD. And when you kind of put it all together, when you're looking at your price and you're saying, okay, do I have a great trade? Do I have open error? Do I have room to run? Is this a high probability setup? Should I have confidence in my orders and everything I'm looking at in the market? Well, I got a potential breakout happening in MPC here, and it's happening on a multiple time frame perspective. Good consolidation on the daily chart. You come out to the weekly chart, good indicators on the weekly chart, quite frankly, but a beautiful high base on that weekly chart. So I obviously am looking at a potential breakout above resistance and above that candle high. Now, specifically on your indicators, let's come into those indicators. What does RSI tell us here? RSI is above 50, it's under 70, which means we're not overextended. And right here, we have a positive slope. Now, we did have a little bit of divergence. Price was consolidating, RSI was coming down. That's not abnormal in consolidation. Remember, divergence is when price is doing something completely different, i.e. resistance is establishing higher, resistance is establishing lower on the indicator. Here we have consolidation with the RSI simply getting alleviated. And so when you see this pullback here and you start seeing that positive slope back up to the top side, that's a positive indicator telling you you have confirmation on the RSI. On MACD here, you also have the potential of a hook and a cross, a hook and a cross, with the anticipation that once the price confirms on the price, that MACD will also cross confirming on MACD. And then last, when you're putting it all together, you got price breaking out, you got RSI confirming you have room to run, MACD's confirming the momentum shift. And what do we see on volume here? We see an increase in volume going into the breakout, showing you additional participation. That's how you put it all together using price plus your indicators. And that's it for this video. If you love this video and it helped you understand how to use RSI specifically, putting it all together from an indicator perspective, go ahead and give that video a nice little like and share. And if you're ready to become a pro member of Tackle Trading, there's always a good time to sign up for a free trial of the Tackle Trading Pro membership. And when you're looking at that, one thing that you want to keep an eye on, the Pro membership has a tremendous amount in it, no doubt about that. We put education and application in our Pro membership at Tackle Trading. But the Traders Report is a list of the best technical setups every single week from a bear and a bullish perspective. This week, we got Crocs, SG, Trip, Apple on the bull side, Dash, Delta, I was going to say the Delta Dogs, that's Datadog, eBay, MPC, VG, FCX, and prep work done as well. Entry prices, legitimate targets, stop losses based on technical criterias. We do that for our pro members. And if you want to get access to that, you can just simply sign up for a free trial at Tackle Trading and test out all those goodies in the pro membership. And with that said, I hope everybody has a truly wonderful, wonderful rest of your day.